Good morning, everyone, and welcome to a chat about business succession planning. So I'd like to acknowledge the traditional custodians of the land and pay my respects to elders past, present and emerging, and extended First Nations people community. I'm streaming from Naarm, Melbourne, and I stand on the land of the Wurundjeri people of the Kulin Nation. So I'll introduce myself and then I'll let Maria introduce herself. Sara Pantaleo. So I've been the CEO of La Poqueta, been on the board of the Franchise Council of Australia and work on a few boards, but I'm mainly a business coach and mentor to small businesses, specialising in family business and franchising. Maria, would you like to introduce yourself?
Thanks, Sara. Hi, everybody. My name is Maria McQuillan. I own and operate Consonant Financial Services. We're a mortgage broking business specialising in business finance and residential lending. I've worked for banks for many years prior to starting my own business, and in particular worked in franchise systems within the mortgage industry and sat on the board of the Franchise Council of Australia, which is where I met Sara.
Thank you, Maria. So today what we're going to be covering is succession. Is it moving, Maria, because I can't see the screen? Thank you.
Yes.
We're going to be covering, I've got two screens, by the way, so if I'm looking away, that's the reason why. Succession and why it's important, whether it's in your family business or whether you're in a corporate, but especially in small business, because we usually don't have as many resources in small business. The types of succession, the elements of getting it right, what can go wrong, and there's questions and answers at the end. So what is succession planning? It's actually not coming up. So succession planning is passing that leadership over to either employees, another group, or a succession could be that you decide to sell. In family business, it's the process of identifying transitioning to the next generation if you want to keep the business going in the generations and keep going for many, many years across and creating legacy. But the types of succession can be a leadership succession. So it could be about that change of management, who's going to lead, who do we hand over to, and who do we upskill, or it can be a succession to ownership. So it could be that you want to sell the business, or it could be that you, in a family business scenario, identify another family member in the next generation that will take over. The elements of succession planning, what are they? Well, the most important part is identifying who are the potential successors. It could be, in a leadership kind of environment, it could be one person, or it could be, if you have a flat structure, organizational structure in small business, could be a number of people. So it's really understanding who they are, right? And assessing the capabilities of one or multiple people. And then from there, deciding what do they need to develop their skills, what mentoring they might need, and what do you need to invest as a leader or as a business in ensuring that the people are ready. When we talk about management succession, one of the things that I found most useful in my career is that I had a continuous development mindset. We had a training culture in the business, and we had a development plan for each individual that gets done with the people that they reported to, but they were in control of. So there could be skills that they thought they needed, or there could be skills that we thought they needed in that role. So we did that from ground up. And when you do that kind of thing, when you create that kind of culture, what it actually does, it actually doesn't make it, it makes it normal. It doesn't make it something that's special, so that when you're identifying a successor to be the leader of the business, the whole business knows that that's what we're doing, right? Because they get it, because we do that all the time. And one of the things that I encourage my managers and leaders do, the team leaders to do, is get themselves out of a job, because then there could be another job for them, whether it's within the business or out of the business. We encourage that, but it's really important to have a transparency around the team, you know, that you're working with, so everyone understands why we're doing it. If you're a family business, you also need to communicate it to people that might not be working in the business, that are in the family. They might be owners, or they might be just married to your family, so that everyone knows where you're at. When you're doing a leadership succession, right, it's not always going to work really, really easily, because there might be some conflict in the business. Who's going to get it? Who's going to get the promotion? Do we have co-owners? Is it an employee? In a family business, is it going to be a family member? Do we actually have a family member that can do it? We may not have a family member in the next generation that can do it, because they might be too young. So we may need to identify an employee. If you're going to do it in a family business scenario, you might say to yourself, okay, we're going to have a non-family CEO, let's say, and then that next generation can be developed and upskilled. Will it be someone from outside? Will it be a key employee? So these are all the factors when you're changing leadership that you have to identify, because there might not be, if you haven't had that culture of development from ground up, there may not be anyone in the business that can take the role with the necessary skills. And really, it's really, really important that you do this analysis. You know, Simon Sinek says leadership is not about being in charge. It's about taking care of the ones in charge, you're in charge of. And why I say that is because knowing your people is a key factor in this. The ownership succession can get a bit more complicated, but however, because it's all aspects of the business, whether you decide to sell or not sell, understand the value of your business. Do you have a business continuation plan? What if the main person that's running a business passes away? Do you have risk management and continuity of the business keeps going? Do you understand the tax implications if you're a family business of handing it to the next generation? Have you documented it all? If it's in a shareholder scenario, do we have shareholders agreements? Do we have a board with good governance? So it's really, really important that you take into account, even if you're a small business and you think, I don't need a board. But if you're a small business, I've seen a lot of small businesses that even family businesses don't have a shareholders agreement. Something happens with the key person and all goes haywire because they haven't handed down how they would like that transition to happen. So it's really, really important that you have all these things under control. But what are some of the considerations? Is do you have, like, does your business have a really great retention policy? What do we do to look after our employees? Because when you're thinking about succession, it is not just for today. It's not something to say, oh, I think I'm going to retire in 2 months. It doesn't work like that. You need to plan, right? So do you have the training programs in place, or is it just an idea? Have you had the discussion? Do you know the legal considerations? I've spoken about the value of the business as well, but talking about the insurance, right? I'm sorry if I'm being gender biased here, but they do call it key man policies, right? I mean, I do know that there's many women in leadership, but the key man policies are you put insurance in place so that if the key person running the business, and this can be a small business and non-family business. I had this when I was running a franchise. I had a key man policy on me. So if something was to happen to me, we actually had an amount of money that would be put in the pot to be able to hire the next person, identify the next person, even though we did have a contingency plan. But that really was something that we put in because my previous, who I succeeded, my brother, he did end up passing away. So, it was an incident on the road. So these things do happen. But what is the succession timetable? So it might be that you say to yourself, I want to retire in 5 years. So then you can have a timetable on who identify if you've got an internal successor. What does that look like? What does the training look like? And when are we going to do the switch? Even though I might not be ready to actually retire in 5 years, it might be 6 years, right? I'm still there. Maybe they can take over in 5 years and I can still be there mentoring them. The importance is communication. You must communicate it to your business, to your team. If it's a family business, to the family and non-family members. I am repeating myself in this purposely so, because that's one of the major things that can go wrong if you don't communicate it well. But why is business succession important? I mean, I already spoke about one of them, which is continuity of the business, because the business is bigger than any one individual. The business is bigger than any one family. It needs to keep going. But also protecting that intellectual property. So if something is all in my head and I am in charge and nothing's been documented, we don't have a succession plan, we don't have any plans, what do you think will happen to the business if I'm gone? So you need to think about that. That is one of the things that's really, really important. Don't keep things in your head. Document them. I've spoken about planning for retirement, but also it's that brand culture. If I've created a certain culture in my business and you've created an amazing culture in your business, if you want to retain that culture, it is really, really important that you have a plan, because then your successor can have a little bit of the history as well as bringing in the new elements. The other thing is that innovation in the business. It's to stay abreast of the business. It might be that I want to do a transition because I am no longer abreast of the innovation and what the business needs at this point in time. So I may move myself to the board and transition a CEO in, someone who is more expert in this kind of business that can transition the business into the future and can continue the business into the future. So succession planning is important on many fronts. But I want to talk about if you decide to sell your business, and I'd really love to hear from Maria in this piece, because she does a lot of financing for small businesses. She does a lot of financing for franchises. And it is really important to be sale ready. What do I mean by that? If for you to be able to get the best price, if succession for you is a sale, you need to be able to maximize the best price that you can possibly get, because this might be your retirement. A lot of small businesses don't always put a lot of money in superannuation. So selling their business might be their superannuation. So really, you need to maximize that. And I can tell you from personal experience, and Maria's going to share in a moment, that having great financials and having at least a 3 years history to show the profitability of the business, having a really great organizational structure that doesn't rely on any one individual is really important. And you need to know, right, if you're on a bricks and mortar business, do you have a long lease? Banks will not lend. If someone wants to buy a business and the business only has a 1 year lease on it, the bank will say, let's say it's a business that's worth, small business can be worth, up to 10, $20 million, right? But even let's just say $1 million, if the buyer needs to borrow $1 million and you've only got 1 year left on the lease, they are not going to lend $1 million with 1 year left on the lease, because then they assess the return on investment. And you need to document your intellectual property really, really well. Specifically, if you're a franchise business, I'll say this to you. Do you have trademarks in every territory you're in? Are the trademarks under the right entity structure? Do you have the right structure of what you are going to sell? Are you going to sell it as an ongoing concern? Or are you going to sell it all in one package as a company? What does that look like? Where does the intellectual property sit? Right? Other product offerings, I spoke earlier about whoever is leading the business or whoever is working in the business, the team that's running it, do they understand our market now and other products that we are delivering to those ideal clients right now? Are they still relevant? Because anyone looking to buy your business, if they think it's an exiting style of business that doesn't have a future strategy, they're not interested in it. Do you have a strong supply network? Do you have a great reputation as being a great payer, as a great business? Because people are going to do their research, right? And obviously all the permits and licenses. But it is really, really important, if selling is an ownership transition that you want to make, that you maximize the price. What's been your experience, Maria, in this space?
So I guess I do quite a few, do finance with people buying businesses. And as you say, Sara, one of the key things we need is 3 years of financial history. So we need balance sheet and P&Ls for the last 3 years. The best advice I can give to businesses is don't do anything with cash, like money. Put everything through the books, all your expenses, all your revenue. Because if you don't declare all your income and you want a certain sale price, the banks are going to say the lending volume is too high for a business of that size, or the purchase price is too high for a business of that price. And they're going to be reluctant to lend money, or they basically won't approve debt. So it's really important that you do declare all income. I know there's
many reasons, because it's legal as well as
legal, and you're better off paying tax is a good thing. It means you're making money, right?
Exactly.
There are some things that can add back, but that is really important. When you're selling a business, having a really good disclosure document is very, very important. As mortgage brokers, we need a copy of that. The asset register, what debt exists in the business, what debt will need to be refinanced by the purchaser. That's very important as well. So if you've got certain equipment and there's leases for that equipment, and that lease will need to be assigned to the purchaser, we need to have a very clear understanding of that. So these are all very important hygiene factors: your organisational structure, the resumes for key people in the business. So not only what their roles are, but what are their strengths. If you're buying a business where you may not have experience in that industry, by retaining the funds, the banks are by retaining the staff in that business and being able to show the bank what their expertise is within that business, it will help you get funding. Because generally banks don't like providing finance when someone's buying a business in an industry they don't have experience. But if you're retaining the staff, that's a really important mitigant. And so the resumes are important there as well.
That's a really good point, because really your people are a part of your intellectual property as well. And one of the things that I do foster with my clients is that they really should develop their team, right? And I think back when I saw Tom O'Toole from Beechworth Bakery speak at one point, and people saying to him, "But Tom, you train your people and then they leave." And he said, "But what if I don't train them and they stay?"
Yeah.
And
the other thing is, when you're buying a business, you need to have some idea about how you exit. So when I started my business, I immediately knew my exit options. My exit options are to sell my business, or in my industry, we sell our book. I can leave it in runoff. So I wanted the option to be able to stop operating my business, but to continue receiving passive income from my business. So I then chose an aggregator who will allow me to do that. So when you think about your exit options, you then make better purchasing and set up decisions. And my other option is, one of my children works in my industry. She may take it over at some point. So by knowing what my options are to get out, I will make better decisions about how I get into the industry and then how I run the business as well.
That's fantastic. That's absolutely fantastic. And when I was franchising and I was recruiting franchisees, one of the first questions I had for them, what's your exit strategy? And they were quite confronted by that.
That's right. And they say, oh, I haven't even bought it yet, let alone, why are you asking me how I'm going to exit?
And then that's why you can never do succession too early.
That's right, exactly. This is another example of why you can never do it too early, Sara. I'm doing a loan at the moment for a gentleman buying a business. And the reason the vendor is selling is because he came out of retirement and bought a business for his son to run, to manage, with a view to his son eventually buying it off him. His son had no interest in joining that business, never joined the business. And then 3 years later, the gentleman that bought the business thought, well, I don't know what I'm doing here. Like, I didn't buy it for me. The person I bought it for, my child, is not interested in being in the business, and now he's selling it. So he came out of retirement with a specific purpose, but his child did not have any buy-in to that, and so he's selling.
I've seen that happen more than once, Maria. I've seen that happen more than once in franchising.
Yes.
And it is really important. It is really, really important that whoever is in the business, and sometimes I've seen the transition happen because of a split in partnership, because you haven't chosen a great partner to do business with, and it gets very, very messy. Now, if you've got all of this, if you've got shareholders agreement, you've got great financials, it's much easier to do the split, because in the shareholders agreement, you will have a buy-sell agreement, and you offer it first right of refusal. If you don't, it gets quite ugly, and you may not survive that transition. That's the reality of it. Yeah. Thank you, Maria.
And the only other thing I'd say is consider your options around sale, because I often see people who just shut down the business because they haven't given it ample thought, they haven't done any planning, and they end up just walking away from the business and shutting it down when they could sell it. And maybe it's not a $500,000 business or $1 million business, but you might be able to sell it for $50,000 for the cost of the equipment or supplies that you've got in there.
Great advice. Great advice.
And there are business brokers that will charge a fee just to list the business, but they don't take commission. So these are important options to explore.
No, it's good, because one of the other transition times is you may not be doing so well. And what I've seen is business owners waiting until they get the money that they invested in the business. And they might not happen. I had a buyer once for a franchisee that wasn't doing so well, and they didn't accept it. And then they ended up closing down and going into liquidation when they could have got $400,000, but they had invested $500,000. And so these are the things. Also know when you need to make a decision for the best of moving forward. No, great. So why is family business succession planning important? But I want to talk about that it can get a bit more complex in family business, because if you want to keep that legacy, right, and you haven't communicated well with your family, there could be conflict. And if there's conflict in the family, that can create a lot of problems. If the matriarch or the patriarch passes away and you don't have your things in order, that next generation has a lot of problems. So it's really, really important to ensure that the business, is handed over to someone that's committed in the business, understands the business, but also in family business, the tax minimisation is really, really important, because depending on the structure and how you do it, they could be paying a lot of tax to take it over, as opposed to just it going to the next generation without any tax implications, if the business continues, that is. And I want to talk a little bit more about family business here, right? And I wanted to show you this. This has been done by KPMG. It has not been done by me, right? And they've got a Centre for Family Business, and I did it as part of a module that I did many years ago, right? And with family business, right, what you'll see, you know, there's the leadership and ownership succession. Look at all the arrows, right? Because, you know, it goes arrows, grooming the successor, the management processes, there's not only the business governance and the business strategy and so forth, but what do you have in place for that family governance? Do you have family business meetings? Do you have, you know, the family business rules? Do you have a council? Do you have a charter? And, you know, if you do all of this great governance in family business, we spoke about some of these last month when we ran our webinar on being in a family business and what it takes. So there's a recording. If you want to have a look at that, let me know and I'll send you the link. But it's really important to get that piece right in the middle, that you've got family and business governance, and that you are communicating to family members that are working in the business and family members that are not working in the business. And then you get the desired the desired, obviously, outcomes are knowing that there will be legacy, but also we're making informed decision making and we've got comfort levels that the business will keep going. It's really, really important. So I wanted to show that to you because I found that really powerful when I did that session, and I think it's really, really something to think about if you've got a family business. Now I'm going to give you some examples. Pardon?
No, I was just going to say, Sara, I agree, particularly, and I've seen it in a lot of small businesses where life partners who may or may not be, often they're not involved in the business, but they're in their partner's ear, and then issues arise in the business as a result. And also, you know, blended families are a big consideration today. You know, 50 years ago, 70 years ago, you didn't have the instance of blended families that you do now, and so there's competing interests in families now.
Absolutely. And what's interesting is, if your family member is working in the business, but their partner isn't working in the business, but they are with them every night, and so they might be getting their perspective of what's going on. So if the communication isn't clear to all parties, there could be some misinformation. So no, thank you for that. But some of the examples of when it goes wrong, right? And a lot of these examples are about the fact that people talk about Kodak, Blockbuster and Nokia not staying with the times. But if they had have recognised and they had have done a leadership succession plan and recognised that maybe that next generation of innovation was needed and fresh people may have been needed in the business to evolve the business, and we didn't keep that thinking, that stagnant thinking, maybe these companies would still be around to talk about it. Some of them are still around, but they are totally different to what they were. Blockbuster is no longer around. Kodak has now diversified but has missed the boat. And they did not reach their full potential. Likewise with Nokia, Samsung and Apple have taken over the market, and Google as well. So really it is about having that management succession and understanding what does the business mean? Is it relevant to today's market? Is it relevant to the future? And who are the people we need as our successors to make that happen? Because it may not be us. And I'm going to give you a family business example, right? And those of you that are from Victoria, they would of my age ilk will know of the Smorgon family, migrant family from Ukraine, migrated here in 1927. They actually started doing small goods and opened a kosher butcher. And they evolved, right, to diversify their portfolio. They got into steel, canning, properties, glass, you name it, they did it. After 70 years, Victor decides he's going to disband the family. They're at fourth generation, and those comments below that I'm going to share in a moment, they are from David Smorgon. He was one of the branches. There were 7 branches of the fourth gen, and a lot of them did not want the family business to disband. It was worth about 1.5 billion. And because the communication wasn't through all the generations, there was no meetings held, Victor made that call and disbanded the family, sold it, and shared the dividends to the beneficiaries, and they all went their merry way. David Smorgon was at a family association event just last week, celebrating 25 years of FBA, and this is what he said. I'll do it verbatim. Myself and several of my cousins argued that we should all compromise and stay together, that the family had a 65-year track record of getting more right than wrong, that there was strength in unity. The most important part, aside from governance, is communication and transparency. Don't keep conflict in a cupboard. He just made these comments last week. And basically, what was going on in their family, that there was conflict underlying and they didn't deal with it. So it's really, really important in a family business scenario, as well as identifying the successor and everything else that goes with it, exactly the same as in any other business, that you also include the family. So in summary, just to summarize, really, it's about, in family business, scary, but only a third of all family businesses successfully make it to the transition from the second generation. Terrible statistic, right? So it's really important that you try, and if you don't have a succession plan, you start planning for it. But really have a really clearly defined succession plan. Identify who the successors are going to be. Know the value of your business. Have a clear transition, training, and all the legal governance, taxation governance, all nutted out. Train, mentor, and uplift your successors. Communicate the plan to everybody, your team, the business, the family if need be, even suppliers in some case, right? And it is good if, let's say, you're looking to retire, whether it is a family and non-family business, do it early. Plan it 5 to 10 years ahead and let the successor come in and make some mistakes and be there to hold their hand, mentor them, and be there to support them. That is a best case scenario. But even if that doesn't happen, at least start having the conversation. And also when you have a plan, review it and update it if you need to. If anyone's got any questions, please feel free to put them in the Q&A. But we are also running another webinar about how do you go on a holiday as a small business in November. And it's going to cover how do you actually make it happen with your team so you empower them and they can actually run the business for you when you're away. But are there any questions? Any final comments from you, Maria, before we head off early?
The best, I guess, advice I can give is seek advice. So, work with your business mentor, work with your accountant, work with your lawyers. It's money well spent because it can be life-changing in business if you get the succession planning right. Yep.
No, thank you. Absolutely. I'm working with a company at the moment doing the succession plan, and I've got another client that's not doing it very well. We're trying to, because they're finding it really difficult to let go. And one of the things that is in the notes, but I urge you, learn to let go. It's really important that you do. But one of the other businesses that I'm working with, they're handing over to their daughter, and it's wonderful at the moment because the mother is actually there to mentor her. She's taken over the day-to-day operation, but the mother is still doing the innovation and menu creation because they're a coffee company. They're a beautiful family, and they are planning for the future, and it's going really, really well. But really, we need that, if it's family business, that generation to learn to let go. If you're in management, you need to not be afraid that people learn and outgrow each other, right? Because it's really important that you have a team that can get the job done that's right for that business, because the business is number one to grow and flourish. So if you would like to contact us, these are our contact details, and we will send all the information and this presentation with an email in the next 24 hours. Thank you very much for attending. Have a wonderful day. Thank you, Maria, for co-hosting.
Thanks for having me, Sara. Thanks for joining, everybody.
Bye, everyone.
Bye.